Hey, what's going on everybody? Leo Invest here, back with another trade recap video. This trade recap is going to be from my ES short position that I took on Friday, June 20th of 2025. And the reason why I'm making this video is I feel like this was an incredibly important trade recap, as it recapped an A+ model of the Candle 2 Unicorn, also known as the C2U entry signature. And so jumping right into it here, what did I notice about both ES and NASDAQ? Well, a couple different things. When I look for higher probability setups, I typically like to see higher interest liquidity zones getting swept prior to looking for some type of reversal signature. And so what do I mean by that exactly? Well, as I've mentioned on my previous videos, when I mean high interest liquidity sweeps, I mean things like session highs or lows, previous daily highs, previous 4-hour and hourly highs or lows. Those are all great examples of high interest liquidity areas where we can potentially see markets sweep some type of high interest liquidity and then create a reversal signature. And so what did I notice about NASDAQ prior to looking at my ES entry for this trade? Well, what do we see happened here on this Friday trade? Well, market was closed on Thursday, so we didn't have anything really happen except a little bit of movement with that early market close. And then what did we see Friday do here? Well, if I just look at my chart, Friday actually swept the Wednesday market high, as we see here. We see that market, this NASDAQ, opened up. So around this 6 o'clock, 5 and 6 o'clock, we saw a 4-candle body bullish closure up above this Wednesday high prior to a massive rejection and then a really aggressive reversal signature that had formed on the hourly time frame on NASDAQ. But what was the difference between NASDAQ and ES in this example? Well, NASDAQ actually swept the Wednesday high while ES did not sweep the same Wednesday 10 o'clock high. And so what do we call that in terms of ICT? That is called SMT divergence. And so NQ here was the leading asset as it was the asset that ended up sweeping the previous Wednesday high, while ES did not sweep that Wednesday high, creating some type of divergence in price because one indice ended up sweeping and the other one did not. And so now, because I'd seen the leading asset being NASDAQ had swept the Wednesday high, I'm interested in trading the lagging asset in order to follow the story of the leading asset. And so what I was looking for now was to see some type of reversal signature form on ES and NQ prior to entering into a potential short position. So let's actually break down the trade now onto a smaller time frame to determine how I gave my short bias for this entry signature. And what do we see here? So as I'd mentioned with NASDAQ from that 6 o'clock up until that 10 o'clock candle ended up sweeping this Wednesday high, whereas ES did not. And so what do we notice about this candle body closure? We have this 930 equities open, and then we had a 4-candle body up closure here, which then finally created a 2 very aggressive bearish candle body movement, which was alongside in correlation with that NASDAQ rejection. And so what does this 4-candle body up closure actually signify in market? Well, that is actually a bearish change in state of delivery. And the reason why is because we had an undisrupted 4-candle body up closure that had led to a sweep of a previous 30-minute candle. As I've mentioned in most of my videos, when I look for these candle sweeps, I like to use aligning timeframes. Examples like the 1-minute and the 15-minute alignment, the 3-minute, the 30, and the 5-minute and the hourly. And on the 3-minute and the 30-minute, what did we notice here? Well, we had this 9 a.m. candle up until this 9:30 candle close, and then the formation of a new 30-minute candle being the 9:33 up until the 10 a.m. candlestick. And so from this 9:30, this 9 to 9:30 candle high, we actually swept the previous high, while NASDAQ was also sweeping that Wednesday high, which created a higher time frame liquidity sweep as well as that SMT divergence. And so now what I wanted to see was to wait for a closure below this change in state of delivery in order to determine an entry bias. But there was also another layer of confluence that helped this trade be even more A+ than just a generic fractal model, T-Trade's fractal model entry. And that was this handy little breaker block that had formed on the 3-minute time frame as well, which I'll mark out here in this red box. And what is the importance of having a breaker block in comparison and in alignment with the fractal model? Well, this actually makes the generic T-Trade's fractal model into a Candle 2 Unicorn. A Candle 2 Unicorn is the base of the fractal where you look for a higher time frame liquidity sweep or a previous session high hourly, 4-hour, or 30-minute sweep into a closure below a change in state of delivery, but then it also actually does a sweep and a closure above or below a breaker block. And so here we have this bearish breaker block as well as a bearish change in state of delivery. And so what do we notice here? We sweep the highs, NASDAQ swept and created SMT with ES. Then ES decided to aggressively, within 6 minutes here, these 3-minute candles, sweep and close candle body closure below this change in state of delivery, as well as just a little bit above, but almost below this bearish breaker block. So now let's play out one more candlestick and see what exactly happens with ES in this trade. Well, ES finally gets a closure below this change in state of delivery as well as this breaker block. And so this, in terms of market, signaled my short position into this setup. And so when we utilize the base fractal with the candle to unicorn, when we are in a short position, we always want to put our stop at the high of this candlestick here, or the high of the breaker block here. So if we look at this trade, this would be our stop period with this 12-point stop just above this bearish breaker. And then as per usual, we want to target a 2-to-1 risk to reward ratio on this trade, because if you want to remain as a consistent trader and or make consistent profits to outdo smaller losses, you typically want to target a 2-to-1 risk to reward. And so for this $600 risk, we were planning on making $1,200 if this 2R did work out. But then there's a couple different things you want to look at as well. Well, when you enter a trade, it's always good to have a plan on where you can anticipate market is going to move. Market moves in waves, but it specifically moves in waves towards draws on liquidity, areas of higher interest liquidity, accumulation zones, supply, demand, support, resistance, you name it. And so what I wanted to originally shoot for was to see this 2R hit, and then if 2R were to hit, I wanted to see the London lows from 4:57 a.m. get tagged as well. Because we had formed such an aggressive hourly candle body closure, as you guys had seen with that very aggressive closure, I wanted to see these London lows be swept for my runner contracts after my 2R hits. And so here, this trade goes from a 2R trade, and if that other trade worked out, that would have been a 3.3R on this position. And so now we'll let this play out, because we've now identified an A+ entry model by utilizing the SMT divergence between NASDAQ and ES, and then using a 3-minute entry model using the C2U, or the candle to unicorn, which is the base of the fractal with this bearish breaker block. So we'll let this trade play out now and see what exactly happens. We see here, we respect this change in state of delivery as well as this breaker block, and then ES starts to deliver lower and lower. And so here, what do we see happen? Well, this next 30-minute candle, the 10 o'clock until the 10:30, formed an equilibrium. And look at what happens here. We retrace into this EQ. Once we retrace into this equilibrium, what does market decide to do? Well, we reject and actually tag us out of our position at a 2R profit. And so once we had hit this 2R, I was now interested in looking for my runner contract to make it all the way to my London lows for this position. And so London lows are an area of high interest liquidity because, as I mentioned, session highs and lows act as great resistance areas or great draws on liquidity. And so this runner contract was left until those London lows were met. So I'll just play this out here, and we finally see that my runner contract had gotten taken out at those London lows for a whopping 3.3R on this position. So an A+ setup from this Friday market, definitely the trade of the week in my mind. And so just to reiterate once again, what exactly did we see happen with NASDAQ and ES? NASDAQ swept those Wednesday highs, while ES did not sweep those Wednesday highs, creating SMT divergence at the highs here, which I'll actually mark out just to make that a little clearer for you guys to see. SMT. After this SMT, I now wanted to look for the lagging asset and trade the lagging asset while the leading continues to lead. And so NASDAQ being the leader, I looked for this ES trade. And the reason why I was more interested in trading ES as well was because ES actually had the formation of this breaker a lot earlier, while NASDAQ did not have that breaker form until a little bit lower. And so ES yielded an early entry signature than NASDAQ and was also the lagging asset when it came to this SMT divergence. Then what did we see happen? We swept the 9 and 9:30 high with the 9:30 to 10 o'clock candle, and then we had a closure below the change in state of delivery and this breaker block, yielding a beautiful A+ trade, plus 2R for my general position, and plus 3.3R for my runner contract. Anyways, hope you all enjoyed this video so much, and if you do enjoy more trade recap videos like this, feel free to like and subscribe for more trade recaps like this one, and I will catch you all in the very next video. Thank you all so much for all the support. I'll see you soon. Bye now.